What's up, everybody? Welcome to Trading with Easy and the Oracle. This is the recap video for Thursday, June 4th, 2026. So today is all green day for me, but I took one loss. And one of the things I want to talk about in this recap video is higher time frames. Higher time frames. I always talk about that the lower time frames messes with your psychology. The lower time frames always introduce noise. I took a trade out today due to a lower time frame, and it was kind of going against what I always try to teach myself, is always look at the higher time frame. So let's talk about it. Here's the market, and as of me recording this video, we are on a V-shaped recovery. Now, market structure for right now is bearish, right? So when you look at this is before we got the green candle right now that's going up. We've been on an upward trend, okay, for about 2 weeks. We still got a gap here that have not been filled, and kind of waiting on that gap to get filled. But what I was looking for, and when we came in the market, the daily candle was red, and I mean it was kind of far down. It's green right now, but we looked at that the market had peaked out here at the top at all-time highs at 30,815, and yesterday's was a red candle. We came down, so we looked like we was in a downward trend because again this candle was red, so we looked at like we was in a downward trend. So our market structure as of when we got in the trade, as of we started trading, was bearish. Okay, so when we look at the 1 hour chart, and looking at Asia and London and stuff like that, I got a lot of lines on my chart. Please excuse that. But when you look at Asia and London, you notice that we was consolidating pretty much the whole session. And boom, this is going to be the 8 o'clock candle. Okay. And when we look at the 8 o'clock candle, it was bearish. Okay. And this is the thing with the 9 o'clock candle. And, you know, I should have talked about this in my first video of my trading journey. A lot of times, if we are on a downward trend, if the 4 hour and the 1 hours all kind of speak into a downward trend, the 9 o'clock candle usually be a reversal candle, because this say we was on a downward trend, and you could back test this because I showed it off in the live stream today. If we are in a downward trend, we came back up and we corrected, and the 8 o'clock candle came down. The 9 o'clock candle was a correction. As you can see, it came down and it wicked all the way down here, and it met up with Asia lows. I'm sorry, with London lows. It met up with London lows, and then it came straight up. And we got in the trade around in this area right here. I took my loss, my first loss in this trade, and the reason why is because I was on a lower time frame. I was looking at the 5-minute time frame, okay, and about 9:15, right in this area right here, I took the trade going long, and I got tricked out my trade is because this one candle right here, very weird, right? So I took the long here. We saw the one candle coming down right here. I got tricked out the trade, and then this candle came in and it went down first, and then it came back up. So right in this area right here, I took a loss. And it was weird because I shouldn't have took that loss right there, but I took the loss right there, going up. And so I took the loss, and then I got back in the trade after looking at the higher time frame. And this is why the higher time frame is so important, because I got tricked out of my trade looking at a 5-minute chart. But when I went to the hourly chart, I noticed that, okay, we got our strong wick. We already hit London lows right here. So we was on the upward trend. It wicked all the way back up. So immediately when I saw that, I got right back in the trade for a nice little profit, a recovery. Okay, I recovered my losses, and I think I got a nice decent profit out the mix also. So it was just so funny that when you're looking at market structure, right, and you're looking at how we trade, it was just so weird. We got tricked out the trade. Now, as it was right here at the VWAP, it started pulling back, and I stayed in the trade throughout the pullback. And right in this area right here, it was more of a consolidation area. So what we did was I wound up staying in this trade, trusting the process. We had some long wick, small bodies, long wick, small bodies, and then we got a recovery here. And my rule of thumb has always been the same, is that I try to only trade the 9 o'clock candle. And so I got out the trade at about, 2 minutes before 10, I got out the trade right here, recovering my losses and getting in for a nice profit. Now, yes, at 10 o'clock, it shot straight up, and it's been shooting kind of straight up, then it corrected, and it's been going up ever since, consolidating right here as of me recording this video. But yeah, so right here, the 9 o'clock candle was a very, very good candle, right? And this is where we trade. And one of the things I do want to mention, right, when I talk about how the 8 o'clock candle is, if it's going in one direction, the 9 o'clock candle is always more of a correction candle. And for about this week, right, we had, and it's only Thursday, but throughout this week, we had that reversal candle as the 9 o'clock candle this week. And this is today's candle. And if I go back, okay, here is the yesterday's candle, red candle coming down, right? Green candle coming up. And this is the 9 o'clock. So we had market structure on the higher time frame, had it coming down. We hit London lows, Asia lows, swept all that. And then we went right back up, and we hit Asia highs. Then the next candle came in, which is the 10 o'clock candle, came back down. So we always have this type of trio, because the 9 o'clock candle is the beginning of the 4-hour time frame. Again, I'm in Central Time as of, right where I'm at. But even with that, if you go back through the previous day, okay, let's go back, and even when you look at that, sometimes we do have, so this is the 8 o'clock candle, right? It swept all the lows, and it went up, and this was a continuation. But here's the thing. It retraced almost the whole candle. So you could have taken a short as it came down, or long if you will wait till maybe the 9:30 candle. So this was a continuation candle, but it was a long wick, almost retracing the whole candle. It did retrace the whole body of the candle, but not the wick of the candle. So this was a valid short, even though it turned out to be a green candle going up. But the 8 o'clock candle went up, and usually you're looking at the 9 o'clock candle for more of a retracement. And that's basically what it did. It retraced the whole body of the candle. And that was that day. And if we go back and we look at the day before, which is Monday, the 8 o'clock candle came down and the 9 o'clock candle went up. Again, we talk about a retracement candle. So this is basically what we be looking for. And this is one of the reasons why I only trade the 9 o'clock candle, is because the 10 o'clock candle sometimes, revert to where market structure will be. Now, this say, for instance, the daily candle is red. If the 9 o'clock candle is green, actually you're going against market structure. This is one of the reasons why we only trade the 9 o'clock candle, because 9 times out of 10, the 10 o'clock candle will continue the market structure the way it's supposed to go. So this is one of the reasons why we stick to that 1 hour candle, because if we going against the grain, if we going against market structure, we going against the trend, if we going against a lot of things in the market, the 10 o'clock candle will definitely show you that it will go back into the direction they need to go in. Again, 8 o'clock candle went down, 9 o'clock candle went up, 10 o'clock candle came down, and it continued the market structure back down. So this is one of the reasons why when we trade the 9 o'clock candle, we basically looking for the reversal, knowing that the 8 o'clock candle usually have a strong trend because the market opened at 8:30 Central Time for us. And so once we see that trend, it blasted its way back down, and the 9 o'clock candle comes up. Now, you also got to remember, sometimes with the 8 o'clock candle, right, it usually doesn't move. So the 8 o'clock candle come in and it consolidate. until market open. And then when market open, then that's when the candle start moving. So this is why we be anticipating and looking for it. Okay, this is what we be looking for. So yeah, when we look at this, 8 o'clock candle came down, strong 9 o'clock candle went up. We took the trade. I got tricked out of the trade. I took 1 loss, 1 win. I only take 3 trades a day, but I got tricked out of the trade because I wasn't looking at the larger time frame, and that to me that hurts because that's part of psychology. That's part of something that I know that I don't usually look at some of the smaller time frames, but I got tricked out the trade using the smaller time frame. But all in all, the market is shooting straight up right now, and the way we discussed the way we did our analysis on the live stream today, we was thinking that this market was going to go down and to continue to go down as we seen market structure kind of go down a little bit. And as we saw market structure go down, we thinking that this gap down here has got to get filled one way or the other. We got this gap down here for, this gap been down here since Friday, going into Friday and Sunday, May 25th. So we had this huge gap down here that have not been filled. And I'm sure that eventually this gap got to get filled. So we anticipating on a gap fill very soon, but it's a far cry. You got to go way down there in order to get filled. All right, so that's going to be the recap video for Thursday, June 4th, 2026. Make sure you subscribe and hit that notification bell. This is Eric. See you guys on the next video. Peace.